Ladies and gentlemen, Tesla stock down over 15% today. Here in this video, I will give you all of the information you need to know on our markets, what happened today, what to watch out for coming tomorrow, and if this could be an interim bottom for Tesla stock, because I do think we are at a pretty interesting technical level. This takes you back to where you were in the first half of October, right after the election and right before the election. And ultimately Tesla stock rallied a lot from that point. And there was a couple instances of volume spikes that came in right around these levels in the first half of October. Could this be a bottom? The short answer is yes. The long answer is it's complicated. The data coming out tomorrow morning will be critically important for investors. So first and foremost, the S&P sold off about 2.5% today. It did hit a critical level before bouncing towards the end of the day. You hit that 450 or 555 level, and you bounce pretty much right there. It looks like the buyers took over towards the end of the day, and you did get a pretty sharp V-shaped recovery into the end of the day, although still down about 2.5%. The NASDAQ was down over 3% today, and that's where a lot more of the pain is. You could see big tech stocks across the board got destroyed. Apple down about 5%, Microsoft down 3.5%, Google down 4.5%, Nvidia down 5%, Amazon down 3%, and of course Tesla there down about 16%. And unfortunately, this could be a low for markets, but the reason we've been selling off is because it looks like we could be going into a recession soon. BCA Research put out a note today where they downgraded stocks. They put an overweight rating on bonds and on cash. Basically made an argument that Doge and the confidence issues that are created there with consumers could push us into a recession as soon as 3 months from now. And that definitely caused a lot of the sell-off today. You also had some firms like Evercore ISI that said 5,200 could be the level in which we could test if we do get a stagflationary environment. And Wall Street has been worried about stagflation in recent weeks. So that was really the news that happened today. You also did get a New York Fed survey that showed consumers are worried about missing debt payments at the highest levels since April of 2020, when the economy was literally shut down overnight. That's not very comforting for a market that has recession concerns. And people are increasingly concerned about their jobs, about the labor market potentially weakening. That creates more, consumer uncertainty in a dynamic like that. Consumers do not go out and spend a bunch of money when they are concerned about the economy. So for good reason, the markets are pricing in more of this recession risk. They've actually been pricing in recession risk for a couple of weeks now. You could see Tesla, Carvana, Palantir, all of your high risk, high beta stocks started to sell off at the same time. Okay, that was very logical. Because as people started to get fearful, they said, oh yeah, we can get rid of that. We'll get rid of that. We'll get rid of that. IWM, yep, nope, get rid of that as well. Because if you're going into recession, these are the last areas people want to be in, right? High value, high beta stocks will underperform a lot during sell-offs. And you see that today specifically with Tesla. Now, for Tesla stock, there was an analyst today that downgraded Tesla, lowered his price target. This analyst is with UBS. They say they only expect Tesla to deliver about 360,000 vehicles in Q1, suggesting that more promotional activities could be coming. That's really what hurt Tesla in 2022 and degraded Tesla's margins. They actually reduced their earnings target for Tesla from almost $3 per share this year down to about $2 per share this year. It was like a 30% reduction, and that has people concerned about Tesla's profitability. Now, these UBS analysts, they say that long-term robotaxi and AI opportunities at Tesla are intact, but short-term, the stock could be too expensive and vulnerable for more downside. I think logically speaking, 16% down on Tesla is an overreaction to that. And I think you're hitting a level of mass panic in Tesla. Now, usually mass panic opportunities mark bottoms. Okay. And that's the difficult part because you're only back to where you were in the first half of October. Before then, you were hitting, the 180s, right? Lower 200s. So you've really only just given back the last couple of months of gains for Tesla, even though you are down about 55% from all-time highs. This could very well serve as a bottoming process for Tesla, but it does really depend what happens with the economic data. And we're going to get more data coming out tomorrow that's going to fuel those recession concerns or alleviate some of the panic. Now, what I would also kind of warrant a little bit of cautiousness by investors is the VIX. The VIX did go up about 19% today. You opened the day at 24.70, and right now you're at 27.83. Okay, so yes, that is a large move up in volatility, but it's not like a bottom, panic move, right? It's not a full-blown capitulation yet. Could it turn into that? Of course. But right now, you're not there. Usually when you're marking a bottom of a correction in which the S&P is almost in a technical recession, you get this capitulation moment. Like, December 18th, you had the VIX that opened at 15 and hit a high of 27. August 5th, the VIX opened at 23 and hit a high of 65. These were real moments of panic, and you really haven't seen that for a while. Even here on September 3rd, 2024, the VIX opened at 15, it hit 21 by the end of the day. These are larger moves. These are like 35 to 50, 100% moves plus in the VIX. That has not happened yet. That's why you hear a lot of people say that this feels like logical unwind, right? This is a ordinary kind of sell-off. You're not getting that mass capitulation yet, even though today definitely feels like one step closer to that. And I do think certain stocks like Tesla have definitely hit that level. And I think you've priced in a lot of bad news. I think you really need to see some bad economic data to continue to justify the selling in Teslas. Tesla is now $221, down from its all-time high of $488 per share in just like 2 months, right? This is one of the most fastest, if not the fastest sell-offs we have ever seen in Tesla stock before. I do believe it is the fastest. It's literally straight down. The fear has exploded. And unless that is followed through and justified by, the data, because again, we're pricing in recession risk. I think we've long priced in delivery slowing down for Tesla. That is not why we're down 55%. If you don't get that recession risk that materializes, well, I think that does open you up to a bounce. Now, we'll look at the technical levels in just a moment, but tomorrow morning, we do get the NFIB Business Optimism Index. I think this is going to be important to watch because following the election, this thing went parabolic. October of 2024, it was 93.7 points. November after the election, it was 101.7. That was the biggest 1 month move we have seen in a very long time for this index. Look at it. I mean, it was straight upwards. The last time you've seen something like this was coming out of the bottom of the pandemic as people realize we're not all going to die and we're not going to be locked up forever and the government's going to provide stimulus and bailouts for everyone. Well, you're back to levels you have not seen since before the pandemic. Well, you started to roll over in January. You came in at 102.8. Assuming we get a big downward shift here in this survey, that's not going to look pretty tomorrow. Why? Because if business optimism is falling, likely hiring plans are falling, investment plans are falling, and that is where you get a larger issue. Trying to, weed through the noise to see, hey, are we going into a recession? Are we not? Is this just a correction that we can buy, or is this the start of a larger bear market? Now, I do think that data will be important, but it's not the biggest mover. That data comes out at about 6 o'clock in the morning Eastern Standard Time. At 10 o'clock in the morning tomorrow Eastern Standard Time, you will get the JOLTS job openings. You're expecting 7.75 million. That's actually up from last month's 7.6 million. Now, this is for January, so we did start to get reports of retailers starting to plan layoffs and things of that nature in January. I do not know if we're going to see that big downward, reaction in job openings. Okay. I think that's coming eventually, but I don't know if that is going to be, represented in the data that we get for the JOLT job openings tomorrow morning for the month of January. So it's really up in the air to me whether or not this is going to fall. Now, if it falls, that means there's less potential businesses looking to hire. That is a sign of an economic problem. JOLT's job openings. I mean, anytime this thing really, plummets, you're like going in a recession, right? Things are not good. It's the volatility of this, the pace of this that will be very important to pay attention to. Assuming, let's say we come in at like 6 million job openings, yeah, there's going to be panic, mass panic tomorrow about a recession. Odds of the Fed cutting rates are also going to skyrocket, right? And we were between, around 6 million job openings or so in like 2016, 2017. 2018, 2019, we were at about 7.5 million, right? So these are normal-ish levels. It's really about the volatility. If people all of a sudden are not trying to hire anymore, that would be a big issue. And that is really, I think, the big data for tomorrow that everyone's going to really focus on. Now, throughout the rest of this week, on Wednesday, we have CPI. Obviously, that's the big catalyst of this week. PPI on Thursday. A couple bond auctions as well that are going to move treasury yields. And then on Friday, we will have the Michigan Consumer Sentiment Survey. Now, on that note, option activity today for Tesla did come in really negative. You had 455 different trades totaling $450 million with a positive order value of 29%. The stock was down 15.5%. I don't think that is a huge shocker, at least to me, when the stock was down that much. Now, short sellers, they actually covered on net about 15,000 shares, which is kind of crazy. Again, considering the stock is down so much, short sellers actually had a net covering on the day today, which is kind of remarkable. CNN Fear and Greed Index sitting at 16 with all of your components in extreme fear besides the junk bond demand category. So not much movement from that recently. The AI Investor Sentiment Survey shows less than 20% of people are bullish over the next 6 months as a contrarian indicator that does tend to be positive unless you're going into a recession or a larger growth scare, in which is really not going to matter who's bearish. I mean, if you start to throw uncertainty out there about a recession as more and more of that builds, it's going to put downside pressure on stocks. And let me just share something that is crazy with you, okay? From current levels, for the S&P to get back to the bottom of the August 5th yen carry trade flash crash would be another 9.5% fall from here. That was back in August. I don't know about you guys, but that doesn't feel like it was that long ago. So the issue, I think, with markets right now is we're still sitting at very high levels, right? Let me say that again. Just to get back to the yen carry trade blow up lows in August 5th, you need to fall almost 10% more from here. That would put the S&P down about 19%. So even if we theoretically went into a bear market here and fell 20%, which is no way my call at this point, it's too early to tell that, it would really only put you back to where you were in April of 2024. It would put you back to about where you were a year ago. That's not, that crazy, right? That's just the testament to how high we are on markets, how well markets have done overall. Now, again, in the case of Tesla, is this a bottom or not? It really depends on recession concerns. The last place people want to be during a recession is high momentum, high beta stocks, automakers, right? And even to some extent, the AI trade is going to get thrown out the window if we go into recession. That's why you're getting consumer staples that are doing well. Healthcare is the leading sector on the S&P this year, right? So it really depends on the data. But when the data does start to flip, if tomorrow's job openings number is not a big collapse, I would expect Tesla could get a big rally, right? I don't think the rally is going to be small if things start to look like they are turning around. Now, in the meantime, if we do not find ourselves looking at good data tomorrow morning, the next level I would watch is that 210 level. Now, 230 could be some resistance to the upside. That should have been a big level of support, as this was really your gap up and gap down level in October, right, of 2024. You went down here was 9%. This was on October 11th. And then you went up 22% on October 24th. The gap down and the gap up level is around 230. That's where you tend to get big moves. Unfortunately, this time you moved down big around that 230 level. So should find some support around 210. If not, 200's a good round number. The problem is we don't have much support under this level, right? Potentially this trend line could serve as support. This longer term, I mean, this dates back to Tesla's previous all-time highs, this trend line here. You follow this down, that could put you down to about 190, and that would be, I think, another strong level of support, in which would be a massive buying opportunity. But I mean, it's hard to say because we're so dependent on the news flow and the headlines. And Trump has made it clear he does not care if the U.S. economy goes into a recession to fulfill the economic agenda. Now, Tesla's RSI sitting at 20. That is also, sitting at that level. Like, yeah, we should probably bounce pretty soon. Okay, we do have some earnings. Let's see if X is back up. X was going through a cyber attack today, and that was another big thing that kind of weighed on Tesla, because if they're attacking Elon, well, they're attacking X, they could be attacking Tesla next, and that turned into a big problem. Today in after hours, Oracle, Asana, and some others reported earnings. Tomorrow, you get Dick's Sporting Goods. In the morning, you get Zim, iRobot, Wednesday pre-market. Wednesday and after hours, Adobe, UiPath, Centennial One, American Eagle Outfitters. Thursday pre-market, Dollar General. Thursday and after hours, DocuSign, Alta, Semtech, and some others. So big week as far as economic data. Not as big of a week as far as earnings, but I think it's really the data that is going to drive the markets. It's going to drive the narrative, recession or not. If we need to price in more of a recession risk, this is not the bottom for markets. And that's really dependent on the data. And it wouldn't be the bottom for Tesla either, which, take it for what it is. I don't know what the data is going to look like. So let me know what you guys think about this down below in the comments section. I am actually optimistic that the plummeting of job openings, which I'm expecting to happen, will not be reflected in tomorrow's morning's data. Could be a short-term bottom. Probably should have gotten a short-term bounce by now. But there's always that chance that you do see a big plummet tomorrow, and things do get worse for markets. And again, we're not really at that capitulation moment. This has been an orderly sell-off. And until we get that capitulation moment, it could be hard to confidently try to mark a bottom as well. So let me know what you guys think about this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.